In 2018, Elon Musk, the man behind Tesla and SpaceX, paid $0 in federal income tax. Not because he cheated. Not because he hid money in the Cayman Islands. Not because he had a corrupt accountant. Because he used a strategy that is 100% legal. A strategy that is written into the American tax code. A strategy that every billionaire on Earth is using right now. And one that, in a scaled-down version, you might be able to use too. This is how it works. First, you need to understand something that most people get wrong about how wealth and taxes actually work. When you go to work and earn a salary, the government sees that as income. You earn $100,000. You pay tax on $100,000. Simple. But Elon Musk doesn't earn a salary. His net worth, the $250, sometimes $300 billion, that number comes almost entirely from one thing, Tesla stock. And here is the most important sentence in this entire video. Stock that you own, but have not sold is called an unrealized gain. And unrealized gains are not taxable income under United States law. You only pay capital gains tax when you sell. This is not a loophole. It is not a trick. It is how the tax code was written, and it is the foundation of everything that follows. So here is the problem that Elon Musk and every other billionaire faces. If he wants to access his wealth to buy a house, fund a company, or live his life, he has to sell stock. And the moment he sells, the IRS shows up. Long-term capital gains tax in the United States sits at 23.8% for the wealthiest earners. On a $10 billion stock sale, that is a tax bill of approximately $2.38 billion. $2 billion. Gone. To the government. Before you spend a single cent. For someone who has built a company from zero, this feels like being punished for winning. So the question becomes, what if you never had to sell at all? The strategy has a name. 3 words. Buy, borrow, die. Let me walk you through each step. Step 1. Buy. You buy assets that appreciate over time. For Musk, that asset is Tesla stock. For others it might be real estate, private equity, or art. The key is that the asset grows in value over time without you selling it. Step 2. Borrow. Instead of selling your stock to get cash, you go to a bank and use your stock as collateral for a loan. A big bank, Morgan Stanley, Goldman Sachs, Bank of America, will lend you up to 50% of the value of your stock holdings. Here is the critical part: a loan is not income. The IRS does not tax you on money you borrow. You receive billions of dollars in cash. Your tax bill is 0. And the interest rate on these loans, available only to the ultra-wealthy, is approximately 1 to 2%. Compare that to the 23.8% capital gains tax you would have paid by selling. You are saving over 21% on every dollar. Step 3. Die. This is where it becomes permanent. When a billionaire dies, their heirs inherit their assets at the current market price, not at the original purchase price. This is called a stepped-up basis. The original capital gains, the profit from decades of growth, are legally erased. Forever. The IRS never collects. Not now. Not ever. Let me show you this in real numbers. In 2022, Musk acquired Twitter for $44 billion. To fund part of that deal, he borrowed $12.5 billion from Morgan Stanley and other major banks, using his Tesla stock as collateral. $12.5 billion received. Tax paid on that amount, 0. In 2021, the investigative outlet ProPublica obtained leaked IRS data and published an analysis. Over a 5-year period from 2014 to 2018, Musk's wealth grew by $13.9 billion. The amount of federal income tax he paid over those same 5 years, $455 million. That is a true tax rate of 3.27%. Not because he did anything illegal. Because he never sold enough stock to trigger significant taxable income. His wealth existed as unrealized gains, sitting in shares that grew in value but were never converted to cash that the IRS could touch. At this point, a question is forming in your mind. Is this tax evasion? Is this illegal? The answer is no. There is a critical legal distinction between tax evasion, which is illegal and can result in prison, and tax avoidance, which is the legal use of the tax code to minimize what you owe. Buy, borrow, die is tax avoidance. Congress has known about it for decades. It is not a secret. The more uncomfortable truth is this: the system was not designed to tax wealth. It was designed to tax income. And when your wealth grows by billions through stock appreciation, but you never earn a salary and never sell, technically you have earned nothing taxable. The tax code rewards people who own assets. It extracts maximum payment from people who earn wages. That is not an accident. That is the design. Now here is where it gets interesting for you. You do not need to be a billionaire to apply the same core principle. The mechanics scale down. If you own a home that has appreciated in value, you can take out a home equity line of credit, a HELOC. You are borrowing against your home's increased value. That borrowed money is not taxable. You do not sell your home and pay capital gains. You borrow, spend, and continue to own. If you have a brokerage account with appreciated stocks, many brokers offer margin loans, borrowing against your portfolio's value. Again, not a taxable event. If you have a 401k, federal law allows you to borrow up to 50% of your vested balance, tax-free, penalty-free. These tools carry risk. If the value of your collateral drops, the bank can call your loan. Leverage cuts both ways. But the principle is the same. The wealthy do not work for money. They own assets. And when they need cash, they borrow against those assets instead of selling them. Own assets. Don't sell. The tax code in the United States was written by people who own assets, for people who own assets. It has been that way for over 100 years. And every attempt to change it, a wealth tax, an unrealized gains tax, has failed in Congress. This is not about whether you think this is fair. Fairness is a separate conversation. This is about understanding the rules of the game that is actually being played. Most people spend their lives trading time for money, earning wages, paying the highest marginal tax rates, never building assets they can borrow against. And then they wonder why, despite working hard their entire lives, they never close the gap between themselves and the people at the top. The gap is not about how hard you work. It is about what you own versus what you earn. Knowing the rules is the first step. Changing which game you are playing is the second. Buy, borrow, die. If this changed how you think about money, hit like and subscribe. In the next video, the 3 assets that average people can start accumulating today that follow the same principle at any income level. See you there.